Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for December 5th, 2018. Let's take a quick look at how the markets finished off yesterday. It was an ugly, ugly day on Wall Street. The Dow was lower by 800 points. The S&P 500 was down 90 points, while the Nasdaq was down almost 300, down 283 points to be exact, and the Russell 2000 finished lower by 68 points, or almost 4.5%. Why did we see this plunge? Well, first of all, the unknown as far as the tariff situation goes with China. Still, the lack of news coming out of there, the lack of a deal is really putting some fear into this market. And secondly, the yield curve inversion. We finally saw the yield on the 2-year treasury note move above the 5-year. When the shorter term moves above the longer term, that's what we call the inversion, and usually it leads to a recession. Now, the 2 and the 5 is not that big of a deal, but if the 2 moves above the 10-year yield, then things could really accelerate to the downside here. The bond market was up, posted sizable gains yesterday, and the yield on the 10-year note dropped back to 2.912. Crude oil was higher earlier in the session, pretty much gave it all back. Did finish in positive territory, but barely, while gold was actually up about 7.5 points yesterday, or about 0.6%. Now, let's go back to those equity charts, the index charts here, and you can see on the Dow that what we have now is, first of all, we failed to make a lower low, which was positive for a period of time, but now that we failed to put in a higher high, now essentially what we have is a channel here. And so a break of one of those levels is what we need to wait for the next major move. If we look at the S&P 500, there's a couple things to look at here. First of all, same situation. We're in that channel here now. We failed to make a higher high, failed to make a lower low. If we go to the weekly chart here, though, we have a bearish engulfing pattern here right at that downsloping 20 now, which is a big concern as well. And not only that, but if we change chart layouts completely here and go to this one where we have the 50 and the 200-day period moving average, the Dow Jones is the only one that hasn't crossed. Here is the S&P 500. It has officially put in a death cross. So now we have the S&P, we have the Nasdaq that has crossed, and of course the Russell crossed a while ago. So things certainly seem like they're heading lower. A very substantial down day yesterday, and if we take out these lows on any of the 4 main equity indices, expect much lower prices. That's about it for now. Enjoy the rest of your day, and we'll see you on our next update.